Hello and welcome to another update video about gold. Yeah, gold broke above resistance and with that is confirming at the moment at least the overall bullish case that we have. I indicated to you in the last video that the next target for wave 3 here, for wave 3 in white, is basically in this ellipse, yeah, basically roughly between 1971 and $2,007. We talked about that already, I think, was it end of last week, this target? Can't remember. Must have been the weekend maybe, or well, it was last week. Yeah, it was last week. Anyway, it doesn't, you'll find it on YouTube. Anyway, we defined this target area. We are there now. Well, that certainly reduces the likelihood of another low. It's not fully ruled out yet. Essentially, we need, of course, to fill in all 5 waves and then watch for a 3-wave pullback. But the price has moved beyond the key pivots and the key resistance levels that we talked about. For example, we explored the idea that this could just be an ABC structure. And to be honest, it still could, okay? It still could be, but it broke above a key level. And I gave you that 1-to-1 ratio level in the last video and highlighted this is really the last step that needs to be broken before we can look at the key target for the third wave. That was here around 1959. The 1-to-1 ratio, we blew through it. So now we have to watch for FOMO everywhere, which is, which is interesting, but that's typically what happens. So I will not take the ABC of the chart. That would be still, let's say, a bearish alternative, but obviously quite strong movement here to the upside, turn around where it needed to in this support area. And at the moment, in line with a larger bullish scenario, we have been tracking even a break above this descending trend line. So if you've been following these videos, you will know that we've been tracking a 1-2 setup for gold, basically an overall bullish scenario with a third wave rally to come. This could be the third wave rally, and it would be a 5-wave move as indicated by the circled numbers 1, 2, 3, 4, 5. Again, we're now in the target range, and now we need to identify bullish support now that we have moved beyond these pivots. So last few days, when we started the turnaround, I indicated to you it's worth tracking the bullish scenario. Obviously, trend change situations are always fragile. And, still we only have reached 3 waves up so far. We want to see 5. So I need to get another wave 4 and another wave 5. At the moment, I would argue we only have 3 waves up. So to maintain the upside pressure, I want to see the price hold now the 50% retracement level of this move to the upside. Let me just, I want to see it hold the 50% fib level. So, which means at the moment, I'm just tracking bullish support. That would be 1927. So what I'm going to do, I'm just going to take out the other fibs, and the 50% fib level is one that I don't really want it to be broken to the downside. We have now reached the minimum target for a third wave. Now, remember what I highlighted to you. When we talk about a third wave in the metals, let's just put that onto the chart. Let's put the fibs onto the chart. So we reached now the 1.236 extension level. Okay, so this was sort of the lower level of that ellipse here. So the idea was to get sort of into this region, minimum the 1.236 extension. However, I have to tell you, if we really are in a third wave in the metals, in the gold market here, and I think silver is doing something similar, then we would normally want to see it blow through that and possibly get to the upper boundary line, the 1.618 extension at $2,008 in the coming days. And we have even seen extensions beyond that in the gold market before for a third wave. So I'm not telling you we get rejected here and we come down. Obviously, now that we've reached the next, let's say, pivot point, next target area, we have to be watching for a potential pullback at some point, but there is zero evidence that this is playing out yet. And in fact, it rather wants to push higher as it seems. But you can see how the market is reacting and respecting those fibs. Yeah, the market is reacting to those fibs and respecting them because it has shown an initial reaction to the 1.236 fib extension at 1977. I would, however, like to see ideally even further extensions towards $2,008 next, possibly. That would add some weight to the bullish scenario. And the bullish support against which we can move higher is basically down here the 50% retracement level at 1927. So breaking that is not invalidation for a bullish scenario, but it would make it less likely. And trading on the long side would become less reliable. There are, however, a few things we can talk about. First of all, at 1927, we have also a previous swing low. So it's ideal to come back to that level maybe at some point and find support here where we had previous swing lows. Just basically confirming those previous supports. It is also the same level as a Fibonacci support. In addition to that, we now also have a potential inverse head and shoulders pattern here on the chart if the price can come down from here and just go up again in wave 5 to get the breakthrough. This is just a potential idea, nothing that is playing out yet because we haven't got a right shoulder. And it would basically mean that the price would need to stop here, come down, test support, and then move up. This is a possible scenario, given that we have reached Fibonacci resistance as well as previous structural resistance. Okay, I mean, if we break through straight away, fair enough, then we can just use that previous resistance level as support and go higher from there. Okay, so overall, I am still overall anyway, I'm tracking a bullish scenario for gold for exactly this reason. Anybody who would have or who was following us already weeks ago, months ago, you will remember that I've been saying constantly that if gold is turning around, it will be fast. And that is exactly the reason why I'm rather bullish on gold instead of bearish. And I'm rather bullish and wrong, and then able to reset lower and get in at a lower price, rather be stopped out if I was trading this. Just because when they rally rapidly. Okay, it's same for silver. If you are, let's say, focused on a bearish scenario, and then you will probably miss these potential entries like we had it here, in the larger green support area, for example, which is an area where anybody who wanted to could have, for example, scaled in. That's obviously how, for you to decide how you want to trade this. I can really only give you the relevant areas where the price has a chance to turn around, the pivot points, the invalidation points, and the points where likelihoods and probabilities are changing. But yeah, the trend is up, and at the moment, no sign of stopping, which is good. Again, I'm showing you a potential resistance, potential inverse head and shoulders could be playing out here. And essentially, we only have 3 waves up of the low, so that it's still quite a fragile structure. But moving beyond all these resistances certainly increases the likelihood that a lasting low has been established, finally, and especially the break above this descending trend line. So I want to see what happens today, but it would generally be preferred if we are really in a bullish scenario to see further extensions in the third wave, and I gave you the relevant levels for that. But I also understand if we come down now, form a higher low, and then go up further, that would also be bullish, especially as long as we're holding the 50% fib level. A warning for the bulls will be, a first warning, will be a break below 1927. That's my update about gold. I hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you're interested in daily S&P 500 updates, also intraday in this very, very interesting market situation at the moment, because it is very, very interesting. And if you're interested in stocks and shares updates, then also take a look at our stocks and S&P 500 service. Link is in the video description. Takes you to Patreon. You can see which stocks are included, what extras you get. And yeah, certainly interesting for anybody who's following the markets. It's not an easy environment at the moment, I can tell you that, but gold is quite interesting, the S&P now as well. So I hope you like the update. Thanks a lot for watching. Bye-bye.